They say every 10 years, something extraordinary happens in the world of Bitcoin. A mysterious force cuts its potential in half, sending shockwaves through the crypto ecosystem. But is it a force for good or a harbinger of doom? Tonight, we unveil the truth behind the Bitcoin halving. Stay tuned and discover the secrets that could change your financial future. Welcome back, everyone. Did that intro give you chills? Well, buckle up, because the world of Bitcoin is full of surprises. Today, we're tackling the enigmatic halving and everything you need to know about it. Let's dive in. Imagine you're a gold miner, diligently chipping away at the rock face. Every successful dig earns you a hefty reward. Now, picture that reward being cut in half, but the gold itself becoming even more valuable. That's essentially the essence of a Bitcoin halving. It's a pre-programmed event in Bitcoin's code that reduces the block reward for miners by 50%. These miners are the backbone of the network, verifying transactions and adding new blocks to the blockchain. Currently, the reward sits at 6.25 Bitcoins per block. After the halving, that number will plummet to 3.125. Why is it important? So, why is this big news? Here's the deal. Bitcoin has a finite supply capped at 21 million coins. The halving slows down the rate at which new Bitcoins enter circulation. This creates a scarcity effect, which in theory could drive up the price of existing Bitcoins based on principles of supply and demand. Think about it like this. If there were only a handful of diamonds left in the world, their value would skyrocket, right? The same concept applies to Bitcoin, with the halving acting as a catalyst for potential price appreciation. Who benefits the most? Well, the answer is in a simple one: miners and hodlers. Miners might see their individual profits decrease due to the lower block rewards. However, if the price of Bitcoin increases significantly, their overall earnings could potentially remain stable or even increase. On the other hand, long-term Bitcoin holders could potentially benefit from the potential price increase driven by the scarcity effect. It's important to remember that the halving's impact on price is not guaranteed. The cryptocurrency market is complex and influenced by various factors. How is this halving different? The Bitcoin halving is a highly anticipated event in the cryptocurrency world, often setting the stage for significant market movements. Prior to the halving, excitement builds as Bitcoin prices typically surge, reaching new all-time highs, ATHs. For instance, in the lead-up to the 2020 halving, Bitcoin surged to over $20,000, marking a historic milestone. During the halving itself, a sense of anticipation fills the air as investors brace for the impact of reduced supply. However, the post-halving period can be just as interesting and often misunderstood. While Bitcoin prices may experience a temporary dip, this doesn't necessarily signal a bear market for the entire cryptocurrency ecosystem. In fact, it can be a strategic opportunity for long-term investors. Historically, following this initial dip, Bitcoin has continued a bullish trajectory, reaching even higher price points than before the halving. This pattern suggests that the halving, rather than being a short-term price catalyst, acts as a long-term bullish force for Bitcoin. So there you have it. The Bitcoin halving is a significant event with the potential to shake things up in the crypto world. Remember, this is just a starting point for your research. Do your own due diligence, stay informed, and happy exploring the fascinating world of cryptocurrency.